Well, good evening, everyone. Welcome back to the channel. So I was going to go ahead and prepare the spreadsheet before the video, but in the infamous words of one of my favorite sound bites, we'll do it live. So obviously, this evening we're going to discuss XYLD, and we are back to our regularly scheduled series after a bit of a detour yesterday about the SIVB situation, the Silicon Valley Bank. Now, we're not out of the woodwork with that just yet. And what I want to emphasize, especially to this audience, is that these funds that sell covered calls and generate massive dividends, these may be more important than ever. If we're going to have a fallout from this banking situation, these funds may actually be more important than ever. So keep that in mind. So let me respond to a comment here that already was waiting on me. And comments from the audience during the live stream are, of course, always welcome. Now, let me start off with Yahoo Finance here, because most of us know a lot about XYLD already. It's the sister fund to QYLD and RYLD. I was liking the QYLD the best of the three, but actually they're all about the same at this point. The dividend on several of them. So let me see here. Why is my screen? Oh, there we go. Okay. So that's funny. Okay, so the XYLD, now this one is the S&P 500 a covered call ETF. So we've got one for the NASDAQ 100, we've got one for the S&P 500, and we've got one for the Russell 2000. I just realized increasing numbers. NASDAQ 100, S&P 500, and then Russell 2000. Of course, the Russell tends to be my least favorite of the three because it just doesn't perform. We haven't had a really good year in the Russell for a long, long time. Now, what we're going to look at here, we're going to take the dividends over the past 12 months, and you notice they're declining. They were really good last March. So we had 50 cents March 21st of last year. Then we had 49.5 cents. Then we had 44 cents. Then we had 42 cents. Then we had 43 cents. Then we had 43 again. Then we had 40.5. Then we had 401. Then we had 405. Then we had 382. Then 41. Then 408. So it adds up to about $5.14 over the last 12 months. So divided by the current share price of $39.28, 13% or 13.1%. That's why the thumbnail says 13%. So with that, and I just zeroed it out on the calculator, but fun math trick here. If it's 39.28 and the dividend is 13.09, would we say $5.14 in dividends? So when I put it into the spreadsheet, all I've got to do is put that in, and the rest is easy. So before we go to the spreadsheet, let me just look over. I'm kind of going in reverse order this evening because obviously the spreadsheet's the part that we all like to see because that shows us our payout. So yeah, I know that fund is a Tesla covered call. I was just wondering the dividend because some of these only show like 4%, so they're not as exciting. Interested in the dividend. Okay, so now let's look again at the share price. So we're actually up tomorrow for now. That could change. Keep in mind, yesterday evening we were up, way up in the futures, but we opened down because the market didn't quite know what to do with itself today with all this banking fallout, which I sincerely hope is not a repeat of 2008. But I have a feeling that they're not going to let the economy crash. I mean, they're just going to. My expert opinion. This is what we've been doing for the last like 3 or 4 crises. We have like bank failures. We have a run on the banks. The Fed steps in. They then cut interest rates so they can literally reverse course overnight to prevent a major recession from happening, which they've done, like I said, for the last 3 or 4 times. But the only question is, how long can that go on? Because if you go back to 2008, we were like $5 trillion in debt. The debt doubled in the like 3 or 4 years. We were $10 trillion in debt. Then 8 years from there, we were $20 trillion in debt. Now we're over $30 trillion in debt. So one has to question how long we can keep doing that. So not to go off on a rant here, but the US currency is the reserve currency of the world, which allows a lot of these measures to happen. But one has to wonder how long that can go on. How long can we just magically sweep under the rug the fiscal situation? So, I mean, yeah, that's great. I mean, who knows? This may be the last time. So, hold on, hold your pockets and hold on to your cash, because if they're going to do this again, get ready, because the market will shoot up again. But say this is the last time that this works, the market's going to shoot up, but make sure you cash in at those high prices, because I just don't see how this can go on forever. I mean, for the next 50 or 100 years, every crisis that we have, are we just going to basically paper over it forever and ever? I mean, who knows? Anyway, end rant there. So let's see. Okay. Now, where was I? Oh, XYLD fund. So the futures are all up tomorrow. Actually, they just doubled since the live stream started. Not implying any correlation, of course. Okay, so this fund has been around for 10 years, just like the QYLD. Now, the yield here only says 1.95%, but we just looked at it and we saw that the $5.14 over the last trailing 12 months is, what did we say, 13% of 39.28. So, and the fund has traded in a fairly tight range. Well, $37 at the low point, $50 at the high point. So we peaked out 2018, actually, we were at $52.43. So the fund in the 10 years, we're almost flat, but it's paid out a ton of dividends. I don't think the fund has actually ever missed a dividend. So let's go back to the dividend screen real quick here. And we will see dividends only. Once we pull it up, and we're going to go back 10 years. So with that, let's see. Look at all this dividend history, going all the way back to 2013. So it looks like it's never missed a dividend from what I can see. So 10 years of solid dividend payouts. This is like a cash cow, even though you're not getting much, if any, appreciation in the share price. So now we're going to go to the spreadsheet, and we're just going to do this live, like I said at the beginning of the live stream. So now let me flip the screen. Let's see here. Monthly, 90 cents a month. Oh, sweet. That's awesome. Yeah, I'll definitely cover that. That's the Tesla covered call. That could be our next fund that we talk about on here. Okay, so now let me go to the spreadsheet. It's funny that a stock has its own ETF. One stock, that shows you how popular it is. But it's funny because Tesla's dropped. I mean, I was looking over an old video I did like in August, and Tesla was at like 3 times what it's trading at right now, which is crazy. So think about all the money. There's been a lot of money made in Tesla, but there's also been a lot of money lost in Tesla. So that's really, really crazy. Okay, so the fund we're talking about. Now, something I noticed in my last video, and I got some comments on this, and this was probably just a typo on my part, but I'm going to clear this up real quick while we're on here having fun. HYGW was the last fund that I covered, and that was the correct ticker symbol. So I guess we'll go ahead and correct it here now. It was actually HYGW, but that was actually a typo on the spreadsheet. So good job for those viewers that really pay close attention to this stuff. You pointed out you were confused by that, and rightly so, because I made a typo. So this one is XYLD, and we'll make sure we get it right this time. So again, same scenario. If you put $1 million into this XYLD fund, this is how you'll come out. So it's $39.28 a share. So a little bit higher than this last one we did. $39.28. We're taking today's close of market. So that would get you $25,458. Now this is a bit misleading here, what you see, because it's not 747. It's actually 514. So $5.14 will get you $130,000 per year, which is still awesome. That's almost $11,000 a month. 43 cents on average, or $350 a day, which is phenomenal. I'd take that any day. I think any of us would. Now per month, let's change this a bit here because it looks like we're dropping closer to this 38 cents. So I'll leave this 38 cents alone. But we've been as high as 50 cents. So say it was 50 cents, right? It was 50 cents. Then is this right? Let me see. That would be $6 a year. $6 a year divided by 39.28 would be 15% times a million. No, this isn't right. What did I? Oh, because I have to change it here. Gotta love these spreadsheets. Everything kind of carries over. 39.28. Okay, so 13.09 is the actual dividend amount. So $130,855. So basically, a 12-cent difference in the dividend per month makes about a $3,000 per month difference in the income on this amount because it's magnified. So you could be looking at a range of a low point of 116, a high point of 152, which is still amazing. So yeah, Zim, I did a video on that. Basically, it had 100% dividend payout. I guess for fun, maybe for April Fool's Day. That's actually a good idea for a video for April Fool's Day. In fact, you know what? I may do that. You just gave me a good idea. Um, how's that one doing, by the way? I got to look real quick. Yeah, Zim, it is true. It paid out 100% dividend. If you look at the dividend history and you divide by the share price, but that's funny. Let's see though, in a year, we're down. Guess how much we're down in a year on that? 75%, almost as much as Tesla, or maybe even more. This one peaked out at $87 a share, and there could have been some insider activity in this because it was a very strange run up. Yeah, how not to retire, how to lose $1 million fast. I mean, if I was going to do something, I think I would respect somebody losing money trying to invest it instead of blowing it on um, depreciable assets and stuff like that. I don't know. It's a tough call, but you could say if you blew it on fun stuff, you were having fun, but if you blew it on a dumb investment, at least you were trying to grow it, I guess. You were being too risky. But we got to take risks in life. We just can't be dumb about it. It's funny if you look at the Apple stock app, it actually says the dividend's 127.84% on Zim right now. I'll try to hold this up to the. Actually, let me stop the share so I can hold this up here. This is funny. 127%. See this here at the top over here? 127.84% dividend yield. That's crazy. But look at that chart. It's like a mountain. See, it peaked like up here, and then it's just been down ever since. It's been down ever since here. So anyway, back to the fund at hand. But yeah, Zim is you can have a lot of fun with Zim, certainly. So back to this. Now, what I want to show next is if you were to just take this and you were to do the dividend reinvestment or DRIP program with $1 million, this is the power of compound interest. If you didn't touch it and the fund stays about the same, which historically it's done over the last 10 years, you've got 1.1309. So there's your 130,000. And say you weren't going to touch this for like 5 years. Watch what this does. In 5 years, you're up to, or in 5 years, 1.6 million, and then another 3. Actually, it only takes you at this rate. This is what's amazing. At this rate, it only takes you 7 years to double your money. So 2091, 921 minus $1 million. That is, of course, 100% gain. But to get this divided by, what is this, 7 years? That's like I guess 15% CAGR, or 15.6%. But again, you're getting an extra 2% per year because of compound interest. So instead of just 130,000, if this was 130,000 per year, then I'll show you here real quick. This is always fun. So that's 780,000. So you get an extra, let's see, 1,091,921 minus 780,000. So you get an extra almost 312,000 just in compound interest just by following that. It's like free money. I mean, it doesn't get any better than that. If you can just hold out, say you're going to live on Social Security, say you're going to defer some like pleasures for today, look where you are in 7 years. And you know what? If you get your expenses down, I know we have like, crazy inflation and stuff like that, 6, 7, 8%. But the good news is if all these banks start failing and the Fed starts cutting rates and the economy crashes, which I hope it doesn't happen, but in a way, you could get your deflation if all of that happens, because that's what happened in '08 and '09. It's kind of a cynical way to, think of that coming, but it could happen. So it's like we have a choice to make. We either keep persistently high inflation, or we crash the economy. It's like, you know, pick which one you want. So with that, let's see here. Exactly. You know what? That was a perfect example of the rule of 72, 7 years. It's like, because 9 times 8 is 72, right? So like if you divide 72 by, like, say your rate of return is 8%, then it would take 9 years. If you divide by 8, then it's, or if you divide by 7, then you're looking at like 10. Yeah, I mean that's a perfect example, unintentionally, of course, but it worked out. Perfect example of the rule of 72. And yeah, I agree. You know, an economic crash is painful for a lot of people, but we need to get this inflation situation under control because it's out of control, to say the least. Um, but yeah, and then we could see deflationary conditions if the economy does crash, of course. But the funny thing now, you've got like a whole generation of people now that haven't actually lived through a major recession. Because let's be honest, that whole COVID recession was not really much of one because the government pumped so much money into the economy. Um, I mean, what, 10 trillion extra dollars? I mean, they really papered over that. So, they didn't the same impact. I mean, people did lose their jobs and stuff. People, oh, Bank of America. Well, that's funny because it's called Bank of America for a reason, right? That's the joke. Bank of America. Would it really fail? Would they let it fail? Well, in 2008, they let Lehman Brothers fail. Of course, the Treasury Secretary at the time was from Goldman Sachs. I won't get into that too much, but I'll let all of you watching do your own research on that. Of course, Goldman Sachs was a big rival firm. So, not saying any more than that, but just do your own research there. And if you ever get a chance, the movie Margin Call is a great movie about that whole thing. Great movie. Let's look at Bank of America since it's popping up in the comments section here, which is funny because I just opened, I haven't done a credit card churning video in a while, but I just opened a credit card from Bank of America because they're offering like 250 back on $1,000. I haven't done one of these since I think June or July. Because what happens, when you open up too many credit cards at one time, they start to cut you off. You can only do it so many times a year. That's in the side hustles videos that I've done. That's what I talk about: credit card churning and checking account churning and whatnot. But basically, if you do like 4 of them a year, they start to cut you off. But you can do those 4, and you can make anywhere from 1,000 to like $1,500 doing that. Same with checking accounts. You just open a new checking account at a new bank because there's so much competition for uh, deposits and stuff like that. So you open up like Wells Fargo. Bank of America is a good example. I've done it there. Um, and I know we're kind of sidetracking here, but that's something I like to talk about. It just doesn't get much viewership on this channel because most of you like to hear about dividends. But you could look at that as a dividend because if you think about it, and the funny thing is, who was it? Amex. I've done a couple of videos bashing Amex, kind of hoping that what little bit of clout I might have as a social media guru here would help out, but it didn't do much. But I was going to show, because Bank of America, one good thing I'll say about them, they are honest with their offers. I'm going to go, because I'll be right back. I'm going to show something here. Because I just opened this before I started the video. But a bit of a shout out to Bank of America. Now, I wasn't a huge fan of their banking, the checking accounts and stuff like that, because they tried to charge me a late fee. And in my opinion, their payment processing technology is faulty. And I come from that line of work, so I can tell, you know. But I was disappointed because I was doing an auto payment. The auto payment didn't pull, and they tried to pop me with a late fee. So I said, that's not happening. Asked to speak to a manager, and then they got rid of the fee. Needless to say, I closed the account like a month or two later because it had served its purpose, you know. And that's the thing. When things serve their purpose, you know, you have to move on so that other things can come along. Now, where is that? I just had it. I've got to give them a shout out because they're honest. Unlike well, yeah, Amex, you know, American Express. Let me tell you, Amex is not popular with me either because twice they've lied about their bonus offers. They're the only company that's done that to me. But I want to make sure I show this here because I really appreciate. Where was that? I had it like right here. Darn it. Because I told myself like right after I was done with this that I was going to open up transfer funds. Now that's an interesting idea. I kind of thought I was a guru on this stuff, but what I do, I pay the statement balance every month. Statement balance in full. I have 4 words. I try to simplify it for people that are not good with money. Statement balance in full. You do that, you'll never pay interest. You get the credit cards to pay you instead of you paying them. But that is an interesting idea. I've never done that, but I will tell you, I've never paid a dime in interest to the credit card companies. I let them pay me. And I'm not saying that to brag. This is a mindset you can get into. This will all be in my book when I put my book out, which I'm still working on here. Where the heck is that? You know what? Since there seems to be some interest in credit cards, I might do another credit card video and just see how it does. But the thing is here, a little behind the scenes info, I'm kind of up against the wall here in terms of my watch hours on this channel. So it behooves me to keep doing stuff that's going to get views because I'm like right on the button in terms of the watch hours. You need 4,000 watch hours to stay monetized as a YouTuber. And doing the math, I'm going to be like right there. But if videos don't get the views, then the watch hours are, well, I'm on the pace that I need to be. But if the channel doesn't quite get there, I think it will. But if it doesn't quite make it, in another month or two, it'll remonetize anyway. Yeah. So that's the thing. It's like if I average like 32 watch hours a day, which shouldn't be that hard once you get a good audience and stuff like that, it shouldn't be that hard. But with this audience like will only watch dividend stuff. So if I can maybe talk about credit cards in terms of dividends, which it is, here's a good example. Okay, if you spend $1,000 on a credit card to get a $250 reward, that's like a 25% dividend, right? So look at it that way. And yeah, Warren Buffett, my guy Warren Buffett, he likes Bank of America. That's good. He should actually acquire some new companies that he doesn't own. Yeah, I wonder why. I mean, he should get into that. I wanted him to buy Amex because if you look at the portfolio of Berkshire Hathaway, they already own like a big stake in Bank of America. Not Bank of America, but Amex. So yeah, it would be cool. It would be really cool if he took them over because if he did, they might actually be a more ethical company. Because I'll tell you what, Geico Auto Insurance, right? He owns them, and one thing about them, they hate losing customers. So another trick of the trade, insurance churning, right? So when you stay with the same insurance company, and I'm gonna just go on this rant while I try to find this that I'm looking for, but when you stay with the same insurance company for years, they're gonna just keep going up on you. So what do? You find another deal from another company. You go with them for 6 months, and a company like Geico, who's run by Mr. Buffett, hates losing customers, right? So because they hate losing customers, what do? They beg for you back. And when they beg for you back, you have no choice but to oblige the request. And a lot of times what they do, they end up giving you the rate that you were paying like 5 years ago. So I thought that was awesome. I mean, I'm a big fan of them. I mean, I didn't dislike them before, but I'm a big fan because, you know, they really, you know, they were straightforward. They were nice. They wanted me back. They gave me a better deal. And that's really what you do. That's what you have to do with insurance. You have to insurance churn, so to speak. Now, literally, I forgot what card this was called, but hold on a second. I'll be right back. Ah, here it is. It was sitting on top. So something Amex doesn't do, right? Amex lets you think you're going to get the bonus offer, and then you go ahead and spend the money on the card, and then you don't see the bonus offer come, and then you call them and you say, "Hey, where's my bonus offer?" And they say, "Oh, you didn't get it." Well, one thing I got to shout out Bank of America for, it's in the envelope right here in writing. So there's no question that you're going to get the bonus offer once you meet the requirements. But see, Amex, I may have mixed them up again, but Amex doesn't do that. That's why I'm not a big fan. And I probably would never do another Amex card again. But I appreciate that. As much as they're not perfect, I appreciate them doing this. I really do. So, and then, yeah, back in the comments here. So, yeah, Warren Buffett, he's sitting on $100 billion in cash. He should do something with that. He should acquire another company. It's never too late. I mean, they should have, one final, major acquisition. I mean, aren't they like in their 90s now? So they should, before they kick the bucket, they should have like one more major acquisition. Anyway, well, I'm glad to see there's some interesting credit card funds or credit card videos. I may do some again in the future, seeing how it goes. Because now I did one. I think one of my most viewed videos actually from like a year ago was on. The title was called "How to Achieve an 800 Credit Score, Paying Zero Interest and Making Money While Doing It." And I tried to model the title after a bigger YouTuber who literally had the same title. And of course, it didn't get 200,000 views, but it did okay. It got 8,000 views. Let me see. What kind of credit card should you get? One that pays a bonus offer. It depends on your credit score. If you have like a 700 or something, you'll qualify for some of these, but sometimes you have to build up the score before you can get these. But it seems like there's so many credit card companies out there, you could never run out of credit cards to do this with because they're always coming out with new ones. So you can do this forever. Like I said, it's an easy way to make another $1,000 to $1,500 a year. I would say, well, here's the thing. So cash back and points are like the same thing. You could use them to buy things. You could use them to get gift cards and stuff like that. I just use the points as a statement credit. So when I spend $1,000 and I get 25,000 bonus points, you basically divide that, shave off a couple zeros. So it's $250. So then it's like a 25% rate of return on your spending. Or another way to look at it is inflation is 9%. And then this $1,000 you spent, you just got 25% back. So basically, you just got a 25% discount on all your spending. So then, for those finance people out there, what's your alpha over inflation? How are you beating inflation? You're beating inflation by what? 16%. So it would be great, like if they didn't cut you off, because there are people that are good enough with credit where they could do one of these per month, or they could do one of these every 2 months or whatever. But they cut you off at a certain point, so you have to wait until you could do them again. But imagine like, and I've thought about this, but not every expense can go on a credit card. But you could do like, it would be nice if you could put like your mortgage or like your rent, or car payment or stuff like that. Most stuff you can, some stuff you can't. But just imagine if you could put all your expenses on credit cards and you could get this cash back, then boom, you would beat inflation easily by doing this. Because not only this, this is giving an upfront bonus offer, and then on top of it, the card probably pays anywhere from like 1.5 to 3% cash back. Some of them pay 5% cash back, depending on the merchant and whatnot. One of my favorite ones is a U.S. Bank. U.S. Bank. This one here. It's funny. I have this sitting here. I call this the starting lineup. Anything that makes it in here makes it into the starting lineup. It's like a team. It's like a sports team. Everything serves a purpose. You know what? I'm getting back into this. I'm going to do another credit card video. But you all that are asking these questions, you better show up to watch it, because if I do it, I need to get the watch hours on it. So the U.S. Bank Cash Plus card is the one you want. This is for, you can pick rotational categories. So you can put like your cell phone bill on it. You can put like your internet, most restaurants that are like quick service restaurants, you can put on there. There's all kinds of stuff that goes in 5% categories. Awesome. I'm glad you like that. I got to figure out a way to display these comments on here. Actually, you know what? I think I just did. I'm going to show your comment on here. I appreciate that. Thank you. Um, I've never done that before. Let's see here. I'm gonna start showing some of the comments we're getting here on the channel. So let's see here, and then I'm gonna show this one here. Let's see. I'll show yours. Yeah, we were talking about Warren Buffett. He wanted to own a bank. He should. He's sitting on 100 billion in cash. Warren Buffett loves Bank of America. And let's see this here. I got to read yours. This looks detailed. Just did that with Capital One. See, great minds think alike, right? Got $300 free money, 0%. So I use it to pay my Obamacare each month. That's good. That's a smart strategy. But Obamacare is not free. I'm just kidding. Also, Costco, I just got a 650. Wow, you must spend a lot of money at Costco. Now, the Costco one's another one I have too, but that only pays like 2% at the pump. I mean, it pays 4% for gas and it pays like 2% in the store. So, but I mean, you've got to really spend a lot of money to do that. And let's see here. I think I addressed this one. Yeah, they're kind of one and the same. So I'll start doing this now. I'll start putting comments up here. Let's see here. This was a good session here. Oh, and then about the rule of 72, which we were talking about earlier. Yeah, that was unintentionally, but yeah, that's what on the spreadsheet I'm showing here. That's the rule of 72 is basically what we demonstrated. And then about the economy, yeah, yeah. I mean, that could be coming. Who knows? But anyway, so yeah, good session here. We ran for about over 30 minutes here. So thank you all. I'll do that credit card video, but y'all have got to tune in for it. So with all that being said, please remember to like, comment, and subscribe. And let's see here. Oh, I got to show this one here. Everything goes through Costco card, even utilities. Yeah. Yeah. One thing about health insurance in this country, there was that whole individual mandate thing that you had to have health insurance or you paid like a 2% penalty. You still get the tax forms in the mail, but I think that's something that Trump got rid of. You don't have to actually have insurance anymore. So people aren't necessarily forced to have it. But, that's another rabbit hole to go down. Insurance costs always go up in this country. Like we haven't seen costs stabilize or come down. That was something that was supposed to happen. But anyway, yeah, as far as Costco, so wow, you put everything on your Costco card. Interesting. What we'll do, we'll have like a credit card roundtable with the audience here, and it'll be a lot of fun. Probably one of the next videos I do, and I'll make an advance post about it so that you all know. I may try to do it earlier in the evening, and we'll have a good discussion. And I'll put all your comments up here. So, oh, one more here. Let's see. We'll do one more. Pay $650 a month for me, $775 for my wife. Yes, you do. You won't get your tax refund if you don't prove insurance. Interesting. I thought that was gone. I mean, they still send it to you, but I think some states require it and some states don't. But anyway, health insurance is not my forte, so I'll stick to what I know. Anyway, thank you all again. Please remember to like, comment, and subscribe. Thanks so much for tuning in, and take care and have a good evening.